Thank you for taking time to learn about this attractive investment opportunity in 1931 funding. My name is Elliot Goldberg and I am the manager and owner of 1931 Funding, and in the next 20 minutes I hope to educate you about it so that you can make an informed decision as to whether this investment opportunity is for you. First, the legal stuff. I produced this video so that you can learn about this investment opportunity and make an informed decision as to whether it's for you. This video is not an offer to sell or buy any securities, as this can only be done through the private placement memorandum to accredited investors. Now, a little bit about me. Besides being the manager and owner of 1931 Funding, I've been an independent registered investment advisor since 2005. After the financial crisis of 2009, I started looking into alternative investments to help my clients add diversification to their investment portfolios with other asset classes. In March of 2018, I started 1931 Funding LLC with the idea of offering an alternative investment that would provide attractive returns, safety through diversification with flexible investment options. If you have any questions, please call me at 610-999-3599 or email me at eg@golddata.com. So let's see if this investment opportunity is for you. This is for you if you're looking for more diversification of your investment portfolio. You probably have some exposure to the stock market, maybe some bonds, real estate, or annuities. This investment opportunity will allow you to diversify your portfolio even further into an asset class called merchant cash advances. This is for you if you're looking for an asset class that is not correlated with the stock market. This is for you if you appreciate transparency in helping you make an informed decision on an investment. And this is for you if you desire annual returns of up to 20% per year. So if you're looking to diversify your portfolio into an asset class that is not correlated with the stock market, if you appreciate transparency in your decision making and want to earn up to 20% per year, then this investment opportunity may be for you. So let's get into the meat and potatoes, shall we? In this presentation, you're going to learn about the 5 things that makes this investment attractive. The first is the actual opportunity. In other words, what can you earn by investing in this opportunity, and how does it work? Next is how the investment is structured, who the players are, how they interrelate, and how you, as a potential investor, fit in. One of the strengths of this investment is the diversification that it offers, and I'm going to spend some time showing you the multiple ways this investment opportunity is diversified. Transparency is something I strongly believe in. I'll share with you a sample of the monthly financial information that I provide to investors and prospects. This investment opportunity offers flexible investment options, and I'll review them with you as we proceed. So, without further ado, this investment opportunity is with a company called 1931 Funding LLC, which is a company that I own and manage. 1931 Funding offers promissory notes with fixed rates of interest for fixed periods of time. You can earn interest at rates from 6% to 20% per year, depending on how long you're willing to invest for. You can receive your interest payments monthly, or, for a higher interest rate, all of the interest on the note's maturity date. The promissory note can be held in either a personal, joint account, traditional IRA, Roth IRA, 401k, trust, or profit-sharing plan account. This chart shows you the different interest rates you can earn based on the term of the note you choose. As you can see from the leftmost column, the terms run from 1 month to 5 years. So, for example, a 1-month note will earn you interest at a 6% annual rate with monthly payments, and a 5-year note without monthly payments will earn you 20% per year, or a doubling of your money in 5 years. Now a little bit more about 1931 Funding and how it operates. 1931 Funding is a company that provides short-term cash advances to small businesses, which I'll refer to as merchants. This is done through a network of funding firms located across the country. These short-term cash advances are called merchant cash advances. In the next few slides, we'll review what they are and how 1931 Funding gets involved. So what is a merchant cash advance? It's a financial transaction where a merchant receives cash today from a funding firm in exchange for paying them back based on their future receipts. They're needed because banks have been disincentivized to offer short-term loans to small business merchants. There just isn't enough money in it for the banks to cover their costs. Even if they could, it can take months for a bank to come to a decision. If you've ever done a refi on your home, you know what I mean. Funding firms were set up to quickly underwrite a merchant's request for a cash advance in as little as 24 hours. Let me give you an example of how this works by introducing you to a merchant named Joe. I'd like you to meet Joe. He's the owner of a growing oil delivery company. One day, Joe comes to work and finds that his delivery truck is broken down. This is a big problem for Joe because he has customers depending on his company to deliver oil to them. Without a working truck, it's not going to happen. Joe calls a few firms that sells trucks and figures he's short about $50,000 to buy a replacement. And like I said before, he needs a working delivery truck yesterday. Joe's in a bind now. He figures he'll be losing approximately $100,000 of profit over the next 6 months and have some very unhappy customers if he can't get a truck on the road ASAP. He tries his banker, but all he gets is a request to fill out a stack of forms with no idea when or if his loan will be approved. Joe remembers that ABC Capital, a funding firm, might give him the $50,000 he needs in a day or two, so he gives them a call. After Joe gives them the information they request, ABC Capital tells Joe they'll advance him that $50,000 if he agrees to pay them back based on his future receivables. Joe agrees, signs the paperwork, and then ABC Capital wires the $50,000 to Joe's company. Joe picks up the truck the next day and he's back in business. This is where 1931 Funding gets involved. ABC Capital has advanced Joe's oil delivery company $50,000 and may want to reduce its risk of default. So ABC Capital contacts firms like 1931 Funding to participate in this advance, letting them offset some of their risk. In this example, 1931 offers to take $5,000 or 10% of the advance to Joe's company. As a participant in Joe's advance, 1931 Funding is entitled to 10% of the receipts that ABC Capital receives from Joe's firm. Thousands of receipts from the merchants like Joe come into 1931 on a daily and weekly basis. The second item I'd like to cover is the investment structure. In other words, how are investors linked to 1931 Funding and the funding firms like ABC Capital and merchants like Joe? Starting from the top are the subscribers, or investors, which are in green. They provide cash to 1931 Funding, which is the second row in a blue box. If you look at the third row in brown, you'll see that 1931 Funding participates with multiple funding firms, which I'll be referring to as funders from now on. These funders then provide cash advances to merchants, which are in gray at the bottom of the chart. The third item is the multiple levels of diversification that 1931 Funding offers. 1931 adds diversification by having participation agreements with dozens of funders across the country. This is important because issues at one funder won't significantly affect its ability to pay you the interest and principal you're expecting. Most opportunities to invest in the merchant cash advance asset class rely on only one funder. History shows this can be dangerous, as recently there have been at least 2 cases where a funder has failed and the investors have suffered. 1931 funding takes small pieces of thousands of different cash advances, which means that 1931 will not be significantly affected by any one merchant's potential default. 1931 funding is also diversified by industry. This slide shows a partial list of all the industries that 1931 has participated in. During the underwriting process at the funder, the industry of the merchant is an important consideration before approval of an advance is made. Geographic diversity is also important. There are times when there are unforeseen events like hurricanes in Florida, flooding on the Mississippi, and fires in California that can affect a merchant's ability to pay back their advance. When this happens, funders reach out to merchants to help them get past whatever emergency they have by either reducing or suspending payments for a short period of time. Having merchants spread across the country allows the overall portfolio to continue to perform even if sections of the country experience emergencies. The fourth item is transparency. To me, one of the most important things that 1931 offers. Transparency helps you make an informed decision and monitor the financial strength of 1931 funding on an ongoing basis. At the beginning of each month, a set of metrics is emailed to investors and prospects that looks something like this. This slide shows some of the detailed information 1931 provides. Included are cash positions, future payments due from funders, bad debt rates, and equity that sits behind your note to ensure payment of interest and principal. Also included is a section labeled Other Metrics in the bottom left-hand corner that contains additional information such as the bad debt buffer, which is highlighted in pink. This is an important metric because it shows the amount of additional bad debt that would have to occur for the equity in 1931 to be zeroed out. Also included is a maturity schedule shown in the bottom right-hand corner that contains a real-time schedule of maturities. If you'd like to view the most current information, just go to 1931funding.com and click on the Financials tab at the top right of the page. And if you want to review these financials with me individually, please contact me directly at 610-999-3599. This chart shows the growth in equity since 1931 funding's beginning in March of 2018. This equity is a combination of cash that I have put into 1931 and the profits that have been realized on completed advances and projected open advances. This equity provides a cash buffer to protect your payments of interest and principal. Flexible investment options is the fifth item I'd like to review with you. You can set your maturity to as short as 1 month or as long as 5 years. It's up to you. You can also choose to receive your interest payments monthly or at maturity, and you can mix and match as you'll see on the next slide. In this case study, the client wanted to invest $100,000 with multiple maturity dates, something we refer to as laddering. The client decided on the following: $20,000 in a 6-month note at 9% with monthly payments, $20,000 in a 1-year note at 14%, $20,000 in a 2-year note at 16%, $20,000 in a 3-year note at 18%, and $20,000 in a 5-year note at 20%. When the 6-month and 1-year notes matured, they were each rolled into new notes with a 2-year maturity to continue the laddering process. One question I get asked all the time is, how can 1931 funding pay such high interest rates to investors? The answer has to do with the structure of each advance. The average length of an advance is about 22 weeks or a little over 5 months, so investment funds turn over at least twice a year. The return or net factor is at least 1.2 after all acquisition and processing costs. That means for every dollar invested, 1931 funding can expect to receive at least $1.20 at least twice a year. Most funders pay 1931 funding daily, so there is an increased return from a compounding effect. And also, some advances are paid off early and renewed into a new advance. There are a few additional frequently asked questions that I get, so I'd like to share them with you now. The first is, how do you make money? I receive a management fee of 10% of all cash received from the funders, and after all the investors have been paid their interest and principal, I keep the remainder. The next one is, what happens if you're not around? While it's morbid to consider, and I appreciate your concern, don't worry, your investment is well protected. If I'm unable to continue managing 1931 funding, all new participations will stop. Receipts from funders will continue to come in automatically, and my lawyer will supervise the runoff of the portfolio. My daughter is employed by the management firm and currently schedules interest and principal payments, so she is familiar with the process. Another is, what happened during the COVID-19 pandemic? This question used to be, what happens in an economic downturn? But I've changed it because it offers a real-life answer to this previously hypothetical question. In reality, the bad debt rate rose about 5% from about 15% to 20%. Funders pulled back from funding new deals, and there was an increase in demand from merchants. For those funders who continued funding advances, they had the pick of the litter, and the bad debt rates for new advances were significantly below 15%. So to recap, here's what you'll get by investing in 1931 funding. You'll get a promissory note with a fixed rate of return for a fixed term. You'll know to the penny how much your interest payments are, when you'll receive them, and when your principal will be returned. You'll have the flexibility to choose whether you'd like a short-term note that matures in 1 month or a longer-term note with a higher interest payout. Also, you can choose to receive your interest monthly or at maturity. You'll get transparency by being able to review the financial metrics of 1931 every month. And you'll know your investment is backed by the financial strength of 1931 funding. I want to thank you for your attention and hope you found this video worthwhile. If you'd like to learn more, please call me directly at 610-999-3599. Thank you again, and I hope to speak with you soon.